guys, welcome back to my YouTube channel and thank you for tuning in once again. Today's video is going to be about going deep dive into my trading plan and also showing you guys how I do my technical analysis on a day-to-day basis and how I do find my potential trade setups which I do execute upon. So just showing you guys the process, how I do it in a step-by-step mechanical way, which can be repeated constantly every single day. Now, every single day may not be a trading day. Every trade you take may not be a winning trade. However, the process to which you arrive at those conclusions to execute those trades should be the same. And that way your edge could play out, after a series of 10, 20, 15, 30 trades, okay? So let's dive straight into the checklist, the trading plan, where I'm gonna show you guys how I do it, on the charts as well. Now the charts we're looking at here is the 4-hour time frame for NAS 100. So let's dive into it and then see what we got. I'm not gonna bore you guys reading through my trading plan. I have shared this trading plan with the masses, so most of you who follow me or are in my community have your hands on this trading plan. But let's skip down to this part, which I call points of interest, finding your bias, and also the process, okay? So we all know what points of interest are. I explained this in the last video. My points of interest are basically my major highs, major lows, which make up the trading range, supply and demand zones, which are your order blocks, and also a magnet for price, which could be a liquidity, both internal, external, imbalances, and also inducement. If you have at least one of these factors closer to your supply and demand zones and also in your trading range, then you have kind of validated that zone, that you could kind of look to that zone for potential trade ideas. So those are my points of interest. Now the other thing over there is what I call find your bias. So it's basically 3 questions. Again, I explained this in the last video, but it's 3 questions I ask myself every day to find a bias for the day. Meaning I just ask myself, where is price currently? So if I look on the charts, where is price currently? Where did price come from? If I can answer these questions, then I can also potentially guess, take an educated guess as to where price could potentially go, as where it's likely to go, which is our job as traders to figure that out. Use whatever technical confirmations you use to support that thesis and, potentially execute upon the trade idea. All right, so let's dive into the process, okay? So this is how we start. So we're going to start on the 4-hour or the 1-hour or the 2-hour. Doesn't really matter. They're all higher time frames in my book. So on the H4 through H1 time frame, I want to identify the overall and current bias and mark out major points of interest for to explain what they are. So let's find the bias for the day, okay? So currently this is where price is. Price is coming from down here. What's down? If price is moving from down here and it's currently up here, means there is a demand zone down here, which we could see. And then this demand zone, as we can tell, did break price, right? And if you look to the left, price has been bearish. So if price is currently here, moving away from this demand zone, and we did break this high, it means price is no longer bearish. It has shifted bullish. So then we want to expect price to keep going higher. Now, if price is actually going to maintain the bullish momentum and the bullish trend, then we want price to then break this high as well. So meaning if we can find, confirmations and zones that support this theory and we get into a buy position, we can look to target at least this high, because we do understand price is bullish. So we want to buy price and hopefully price continues higher, okay? So we've just figured out what our bias for today is. Now we just have to mark it up. Again, the only thing I'm marking up are my points of interest. So major highs and major lows to form a trading range, okay? So this is my H4 high up here. H4 high, this is my H4 low. This is the previous H4 low that formed this high. This is a low, not a high, so let's correct it. H4 low. Now this is the H4 low that formed this H4 high. Now this has caused another H4 low here. I wouldn't mark it as a low yet until it actually breaks price, this high, and then it becomes a low, but it's not at the moment. It's not my actual trading range. So let's see what else we have. We did identify we do have a demand zone, so that's good. So let's just mark it up as H4. And also we do have this as our change of character, meaning this break would be the last liquidity sweep. All right, so we already got that, and that's all I am marking up on the 4-hour time frame. That's it. So let's check it off because we already did that. Now on the next step, it says once price mitigates the 4-hour or the H2 H1 POY, you want to drop down to the 15-minute time frame or the 10-minute time frame. M15 and 10-minute, they are my intermediate time frame. Okay, so let's drop out. So we already mitigated the zone, which is down here, so we're going to drop down to the M15. Let's just do that. We are on the M15 right now. Okay, let's see what we got. So we're gonna check it off. We already did that, so let's just check it off. Now on the M15, we wanna look for a sweep of price into the H4 POI, okay? So this is the H4 POI. Did we get a sweep? Yes, we already did. So let's just mark it up. This was the last low to be taken out before the change of character up there, so that this would be our liquidity sweep. We already got that. So now we're looking for the change of characters and the break of structure to support our trend, okay? We already have a chalk, which is up here. So we can call this our chalk. Okay, what else do we have? So now we have to mark out, so we got a chalk, let's mark it up. Now we want to mark out the order block that we want to buy price from, okay? So if we're taking a look at this whole trading range, this will become, let's mark it up to see if we have our high. Okay, we do have our high. This will become our M15 high. M15 high. So now where's the M15 low? Now the low would be all the way down here. This is the swing low, right? All the way down here. So let's mark it up, M15 low. Okay, that's our trading range. Because this low broke this high. Okay, now if you want to be very technical and go into the intricacies of internal structure, then we're gonna say, well, there's an internal change of character here, which mitigated this zone, and this also broke this high over here, right? And then we went up, we pulled back, we've been ranging, and then we finally broke the high, so then our low would be here. But all the same, we get the idea. So let's just call this our current structure for price, okay, which it's already even been touched. So let's just mark it up as our M15 structure, meaning our M15 low would actually be down here. Again, we can go back and I can explain again. This would technically be the low that broke this high. That's the swing low and high. And if you're looking at it internally, we've been breaking all these structure, forming new lows as prices going higher, and then finally this whole zone has caused price to break structure even more. So we would expect price to come back down here and then keep going higher, okay? So then you'd find your trade idea from where, from these zones down here. So let's play price. Okay, let's see, we are in this zone. This is late New York. So let's just call it a day and keep on going with price. Let's see what else we've got. All right, we're in the new trading session. Let's see what we got. Okay, so let's see what's here. Price has broken structure again. So let's mark our new high. So our new high is currently up here, and our new low would shift over here. So now let's explain why that is the case. Let's mark our break of structure, which is over here. Break of structure. Okay, this is a little bit messy. You can see all this wicks, but let's just restructure. Okay, price came back, mitigated the zone, and then it went above, pulled back into this little demand zone, and then broke structure. So this here would be internal chalk, but the actual trend has already chalked. Okay, so just stick with it. Price mitigated this M15 zone, it went bullish, they didn't break the swing high, it took this internal high and pulled back. Okay, so then this is the low, and then this low broke the actual external high. Okay, so let's just call this M15. Okay, and this here, it will be internal chalk. You don't need to mark it up or understand it. Just know your highs and your lows, basically. So now this is our current trend. Let's see what we got. Okay, so we're gonna correct the high. It's up here. Now, an order block for us to buy price from. You can see this bullish engulf, and he has a textbook order block. It could be more extreme than that, but we'll use confirmations to support our biases. We also have this Asia session liquidity, Asia low, to attract price into the demand zone. So we have Asia low as liquidity. We also have imbalance over here, which can also attract price back down into it, okay? So let's see, we mark out the order block, and now we want to wait for price to mitigate this zone. Once price mitigates the M15 zone, you can go ahead and take a buy from it, or you can even go further down to lower time frame confirmations and then execute those trades. So let's just wait for price to get back into the zone and see what we've got. So usually you could just set alerts and just wait for price to do its thing and then come back to the charts, which is what I would recommend in an actual live trading scenario. Okay, so we are in this zone. Again, you can buy directly from the order block, but because we want to use lower time frame, we're going to check that price mitigated the zone. Now we're going to skip down to the M1 or M5, M3, M2. They're all over time frame. Let's drop down into the 1 minute, for instance. All right, let's see what we've got here. Okay, we're going to keep playing price to see what we've got. Okay, so let's just fix this so we can see our candlesticks. Now, this would be the last zone that price mitigated. As you can tell, price mitigated the zone, pulled back. This zone failed to break this low, and then it got taken out, meaning that would be our change of character. Okay, so this is our chalk. Let's see. So now we want to find a zone to buy price from. So it could be this zone down here, which prices come into. So we can call that an M1. So now let's look for the next M1 potential zone. We can mark this zone out. Price has already touched into it. Okay, also M1. So now we can look for the next zone, which we can use this whole candlestick here as a potential spot to buy price, M1. And then if that's the case, let's look for let's go to that 2 minute as well, see what else we could see. Okay, so we have the same zone, we have the chalk. Let's go to the 3 minute. Okay, there's not much to see on there, but I like to click through these lower time frame time zones to see which zone would be best to take a trade off of. Let's remove these for a second. We're on the 2 minute, so we're gonna mark this zone here as a 2 minute zone. We'll call it the M2, right? And then if we're gonna take a buy from here, let's see. Stop loss below the order block. You can put it below this low to be much safer, but if we're using order blocks, then stop loss below the order block. And potential targets would, again, let's go to the higher time frame, for instance. We can start with the M15 high for the day, which would be a perfect target, okay? A good place to start. So back to the M3, let's see what we've got. Okay, back into drawdown. Okay, so let's see here. So price came back into the zone again. All right, it mitigated the zone again. It broke this high over here. It broke this high. We can call it a break of structure. So now, as it's pulling back up, we have another candlestick confirmation, which is this M3. Okay, and then you could take another potential buy from that order block. Okay, all right, so that order block has been respected, and then the high is the M15 high up there, and that would be a good trade for the day. A nice 12-hour if you took the second entry, another potential 6 or 7 hour. But again, the ultimate target would have been the H4 high because we understand price is bullish, right? So let's see the next candle. So the next candle actually does breach the H4 high. So now we have an H4 break of structure. Okay. Again, so let's go to the lower time frame. So if we go back to the, let's try the 2 minute. Let's see what we've got. Let's go back on the 2 minute. So prices filled liquidity into the zone, right? We did have a change of character. We had our order block, and then we executed from the order block. That's what the lower time frame confirmations are. But yeah, that's how I go about it, from a, from the H4, H1 all the way to the lower time frames to look for confirmations. I do this every single time. Now, of course, not every trade is a winner. Not every trade is a loser. Not every day is a trading day, but the process to find these trade ideas are always the same, and that's where my edge comes into play. I probably have a good 50 to 60% win rate. Average is reward of 5R or more, sometimes less than that, but on average at the end of every 2 weeks or every month, I'd be in profit, win or lose, regardless. As long as I can maintain the proper risk management and the proper risk to reward ratio, you'd always be in profit regardless of the trades that you lose. Okay, but yeah, no guys, so that is how I go about it, and that's how I do my technical analysis on a day-to-day basis. Let's go back and look on the higher time frame. Let's see, but yeah, so that is that. Hopefully you guys enjoyed today's video, and you guys kind of, hopefully I didn't ramble too much and you guys actually understood everything I was trying to show you guys, and show you my approach and whatnot. But more of these videos will be uploaded to the channel. This is just first of many. We'll go more in depth as time goes on, but yeah, this is a simple step-by-step approach as to how I do my technical analysis and find my trade setups for the day. All right, so thanks for watching, guys. Hope you guys enjoy the rest of your day. I'll be back with more videos, and hopefully you guys stay tuned and actually watch the videos and learn a nugget or two out of it. Well, I'm peacing out, guys, so thank you for watching. Catch you in the next video. Peace.